Good morning, everyone. My name is John Ward. We're going to give an extra 15 or 20 seconds for people to switch over, and the panel will get starting, like I said, in just a few seconds. Good morning again. My name is John Ward. I'm a managing director at Duff & Phelps, and it's my pleasure to be part of this panel. We're going to be discussing the ongoing monitoring of fund managers. Just a couple of quick housekeeping items. You probably heard this in other panels this morning, but this is a live broadcast. The four of us are all communicating live, and if you would please, it'd be easiest for you to see us if you click the viewer onto full screen mode. We encourage you to ask questions. There is a Q&A bug at the bottom. It says Q&A on your screen, and you should be able to go ahead and ask questions, and feel free. I'll try to monitor those and bring those in as best that we can. The event today is being brought to you by Duff & Phelps, which is a Kroll business. You may see that Kroll is in the middle of a rebranding. We're rebranding the firm under the name Kroll. That'll encompass our whole firm, and that way we will be more able to work closely across all of our business units to support our clients, and we welcome you. Also, this is being this whole event is being coordinated with conjunction with the IMDDA, the Investment Management Due Diligence Association. We are very happy to partner with the IMDDA. For those of you who are institutional investors, I would highly recommend you connecting with the IMDDA. They are your advocate in this space. So again, I'm a managing director and head of the operational due diligence practice. The more complex bio of all of this presenters is available through the control panel. You can click on it and see it. I'll ask everybody to go ahead and quickly introduce yourself. Todd, you want to introduce yourself?
Sure, thanks, John. Good morning, everyone. I'm Todd Lusk. I'm managing director, head of investment operations at Children's Healthcare of Atlanta. Among the many things that are part of my responsibilities here, operational due diligence across our global portfolio is one of those.
Anu?
Yeah, hi, everybody. Good morning. My name is Anushree Matha, and I head up operational due diligence at Sigler Guth, which is a private equity and real estate fund of funds. Across my career, I have done operational due diligence on private equity as well as hedge funds and traditional asset classes.
And Udith.
Hi, hi everybody. My name is Judith Berenz. I am an associate managing director in the compliance, risk, and diligence practice of Kroll. And thank you, John, for this opportunity to talk to everybody. I'm looking forward to our conversation.
Anush, if you don't mind, I'm gonna go to you first. Clearly, ODD folks, we typically go on site once a year, if that. We also may rely on other phone calls and other communications, but generally there's a large period of time throughout the year where we are not regularly touching base with fund managers and monitoring their activities, their process controls, changes in assets, changes in staff, and those types of things. Can you give the folks who are listening in a little bit of an idea how your firm looks at the monitoring processes and some of the things that you are using to monitor your fund managers?
Yeah, no, absolutely. So I'm speaking from a private equity perspective, whereas, you know, John, initially it was all about just the initial due diligence and no monitoring after that. I think the PE ODD world is obviously evolving to do more regular touch points with the manager. So some of the things that I look at on an ongoing basis from a monitoring perspective is, yes, we do the on-sites on a regular basis, but we're also using questionnaires that we will send out to the managers, do media checks, background checks, as well as analyze their ADVs and any other documentation that will come in from the manager, just to know from our perspective if there have been any changes. Also, it's always good to leverage the investment team and their conversations with the managers to see if any operational changes have occurred.
Todd, your organization invests in a broad a bunch of different asset classes. Can you just expand a little bit further? What are some of the things that your organization looks at as you're monitoring your clients, your fund investments, excuse me?
Sure. Our portfolio is global. We invest across equities, fixed income, hedge funds, venture, and buyout. So similar to some of the comments Anu mentioned about monitoring, we have a monitoring program that is fit for our purpose, which includes similar things: document collection on an annual basis, a review of the ADV, touch points throughout the year for the investment team with the manager base, and then touch points throughout the year with myself, with the operations folks. One of the things that we value here is the partnership. Children's Healthcare of Atlanta thinks about our investment managers and portfolio from a long-term perspective. What we're trying to accomplish is have a select number of manager relationships that we partner with, and so to do that effectively, we feel like our ability to add value, our ability to be a source of information for managers is important. And to do that, we find that having the investment team plus the operations team, including myself from an ODD perspective, engage with them on a regular basis is important. And so for me, that is reviewing materials more regularly than annually, taking in information from colleagues, looking at their portfolio, looking at things that have changed from a portfolio position, from whether they're trading in new asset class types to deploy their strategy. All of those things, for me, generate conversations and those touch points. And certainly when things change that are from a compliance, regulatory, or legal perspective, that prompts a more immediate discussion. But more generally, the more conversations I can have with managers, the stronger our relationship becomes over time.
Great, thank you. Udith, if I could, I want to bring you in. One of the things that both Todd and Anu mentioned is early, typically prior to investment, folks may consider doing some type of a background search. And a background search can be a one-time event that occurs prior to investment, or it can be an ongoing monitoring process. Why don't you talk a little bit about, you obviously work in the Kroll business, the part of the business that does the background search. Can you just talk a little bit about sort of what are different options that an institutional investor who's looking to deploy ongoing monitoring through a provider like yours would potentially be able to offer to institutional investors?
Yeah, sure. Sorry. Thank you, John. Yes, and you're 100% right. We see investors come in initially when they look to invest in the funds to do a more deeper dive into the background of the principles of the fund. So we'll look at the public domain generally and make sure that we look at regulatory checks, compliance checks, adverse media, as Todd just mentioned. But what we see now is this focus on knowing that you have the knowledge of your business relationship really up to date. So what do we do there? And we see our clients do a mix of different things, what I believe is important, and also a mix of what kind of periodicity you're looking at. So really there is that deeper dive that you wouldn't do really too often, right? You wouldn't do that on a monthly basis or even on a quarterly basis, but maybe on a yearly basis or every other year, you would really do another deep dive into those managers. But on an ongoing basis, there are a number of different systems, and we have one of them. There's obviously others in this space where you would put the names in just to make sure that you again stay up to date on what's going on. And one of the challenges there is, of course, there are a couple challenges. One is making sure you get that right periodicity so you don't overwhelm your staff, your systems, your processes with potential either false positives or items that are not really that relevant. So that's one thing. You want to make sure you get the right periodicity. And talking about false positives, making sure you get the right systems that you have a fewer number of false positives that your team again and your staff have to look at. So that's something that you have to work with your provider on, and also think about, again, what do you have available to yourself as it relates to people to look at and to look at this information. But I think at this point in time, you do want to make sure that you have some type of ongoing monitoring at a periodicity that you have agreed on from a risk perspective, to look at these different items in the public domain. So that's what we're seeing. Again, deeper dive in the initial stages, and then at certain timelines doing that dive again, and then that ongoing monitoring kind of as a baseline.
Yeah, I agree. The finding a provider that can help avoid the onslaught of false positives, I think, is important. We used a different monitoring firm when I was an institutional allocator some years ago. If you have a manager that has a relatively common name, you may get a lot of notices of concerns that turn out are totally unrelated to your manager. So working with a system or a provider that can help you screen out false positives, I think, is critical. One of the other things that was mentioned, both by Anu and by Todd, was the Form ADV. For those people who are listening in who are not familiar, Form ADV is a document that is required by the SEC, the Securities and Exchange Commission in the United States. The document, or the completion of the online document, is required for everybody who is a registered investment advisor, and many of the state registered investment advisors would also fill out a type of Form ADV, and that is available publicly through the IAPD website. So again, if you're a foreign investor and you're looking at an American manager, you may be able to look at their Form ADV. Anu, if you could, what would be some of the key takeaways? What would be some of the changes that a manager might make to their Form ADV that you would want to capture, that you may want to follow up on? Obviously, the ADV is a big and complex document. What are some of the key areas that you might focus in on?
Absolutely. So I conduct a Form ADV analysis on an annual basis. And some of the things that I look at, right when you look at the brochure, the document, you see the recent changes. Obviously focus on that. If there have been any material changes over the last year, the manager will disclose those. Look at, they do have their staffing numbers, number of employees. I will always monitor that to see if there have been any significant, increase in headcount or decrease in the headcount. Look at the regulatory items within the Form ADV, their disclosures of any regulatory or legal events that might have occurred over the last year, as well as the conflicts of interest section. I find very interesting. And the section where they disclose all of the funds, just to see if they have suddenly an increased operational complexity because of adding more separate accounts or funds to their strategy, their overall platform.
Todd, if you don't mind, I'm going to circle back on one question. We had a question come in through the Q&A relative to credit checks. Has your organization ever considered a credit check of some type on a manager? Obviously, it may be difficult depending on where in the world the manager is. Have you guys ever considered or undertaken a credit check of any type? And if not, what is your thinking along doing a credit report when you're looking as part of a background check?
Yeah, good question. So what I would say is part of our background check process, we have managers sign a release form that allows us to do education, criminal, legal, and credit checks. I think from our perspective, the way that I rationalize this is all of these data points, criminal, legal, credit, all speak a bit to state of mind and the level of distraction or the level of focus you might have in your performing your role at your organization. So I can say definitively that we've done credit checks on managers that we've invested in as part of our background check process. Those have been both in Canada and the US. I would agree that it could become harder in different jurisdictions. We haven't crossed that bridge yet. But I believe when that is the case, we will continue to do a credit check in those jurisdictions as well, time permitting and cost permitting.
Judith, can you just briefly touch on that? It's the difference between a credit check, background check, and the services that Kroll provides in this area. Sort of what are the differences, or in fact, they different, or are they the same? What is your thinking?
Yeah, so that's really interesting. And just for full disclosure, from a credit check perspective, we don't at Kroll do credit checks, so that's actually not part of our public domain background check. But to talk a little bit about what Todd said about education verification, criminal litigation checks, regulatory checks, those are all part of the public domain, and those we generally even can do without consent, but it makes it a lot easier to do it with consent. So I would say our standard, what we call our public record review, includes all those checks: compliance checks, litigation checks, education checks, education verification. Also agree with Todd, that can be a little bit more challenging in foreign jurisdictions. We oftentimes do need consent there, but when we receive that consent, we really can do those checks as well. As it relates to reputation, that's another level that we actually offer. That's not the public domain anymore. This is where we actually will go out and ask people discreetly, of course, about the reputation of the person that they're engaging with. Now, I will say, generally speaking, that's not the level of review that we will see for a institutional investor that goes and invests in a fund. That would be potentially an acquisition, or really more of a large pre-transactional level of due diligence. So I would say public record review is very much the standard of what we see, John.
Thanks. And just Judith picked up on something there, and I want to things to think about if you're an institutional investor. Whoever you're using as your provider for background search, look at under their terms, how far back do they look? Some organizations have a policy that they go back 5 years, 10 years, or however many years. Check to make sure that your organization is doing what you need them to do. If your investment manager is 35 or 40 years old and they only go back, let's say, 10 years or 15 years, it may or may not pick up, let's be kind and say, inappropriate things that the person may have done in and around the time that they were in college and ran afoul of criminal or other problems while they were in college. So again, an organization that you're using for background search that makes clear that we go back 5 years, 10 years, 15 years, make sure that it is consistent with what you need them to do. And the second thing is we're seeing more and more managers investing. Clearly, globally has been going on forever, but there are now folks who are looking for emerging managers in emerging parts of the world. I think it's incumbent upon your organization to use a background search provider that has foreign language capabilities. And I would think that you would want to make sure that you're using an advisor for your background search that can help you in that regard. So Todd,
go
ahead.
Just one thing, because you make me think of it. So sorry to interrupt you, but what's also, because you make me think of the fact about the different jurisdictions. So also really important to work with an organization that will do the initial scoping for you, so you know which jurisdictions you want to cover, right? So, and that should be something that you do up front without being charged for. So we do this, we'll work with our clients and say, John Ward, we're going to review him in the United States because that's where he's been all his life. But Judith Berens, she used to live in Amsterdam, so we're going to review her in the Netherlands with our Dutch language sources. So that is something that you should focus on too, that initial scoping of your subjects.
Exactly. Todd, again, I'll jump back where we were before the question came in. Can you talk a little bit about when you're looking at the Form ADV, what might be some of the hot button issues that might cause you to follow up with a manager when you're reviewing the ADV, and with what frequency does your organization review the ADVs?
Sure. I'll start by saying I agree with Anu's comments on what she looks at, very similar in terms of people and fund complexity and the legal and regulatory disclosures that would be in that document. I also look at the ownership. And one of the things that I would look to that would prompt discussion is change in ownership. So it's reviewed and it's published by March 31st annually. And certainly any change to that document is also required to have a subsequent disclosure within, I think, 30 or 60 days of that change occurring. And so I would look at those documents on an annual basis shortly after March 31st, when all of them are available, so the month of April. And then I would look at others as changes occur during the course of the year. Material things that I also think about are changes of address, which change of address by itself means that they simply move geographic locations. But when you think about an asset manager's business, that implies a technology lift, that implies perhaps staffing or hiring new resources or integrating other things into that change. And so that change by itself may not appear as material as it otherwise would be. But when you're moving your entire technology stack or you're moving your entire team and you're going to a new office space, there's a lot more involved in it today than there was, say, 10 years ago. And so that's usually something that I'd like to talk about. Why is the manager making this move? What is this? What is the purpose? What is the long-term vision for these things? And then the ownership, simply always like to understand who has control of the economics for the managers that we're invested in, and make sure that the alignment exists that we expect and that we underwrote when the investment team sources a manager.
Great.
Sorry,
Our team, go ahead, Anna.
I would just like to echo the ownership point, but another important thing to also look at, which I forgot to mention, is any change in service providers, which would also, in terms of the administrator and auditor, which would also be disclosed in the Form 80.
Yep. My team within Duff & Phelps, we built a system called Regulatory Clarity. Regulatory Clarity pulls in the full ADV of every registered investment advisor and every state registered advisor every single day. And we look for changes. And our clients receive an email first thing in the morning. It typically goes out in the United States, typically before about 7 a.m. And it would notify you. You would put into the system the names of the managers that you are monitoring, and it will notify you. And what I think our system does that's a little unique, and it speaks exactly to what Todd and Anu are talking about. So we, in addition to saying, hey, there's a change, we try to focus it on, is it a quote-unquote normal change? Assets under management went from 1 billion to 1.1 billion. Many people would consider that to be a normal business change. Or staffing went from 105 to 107 people at a manager. Most people might consider that to be a normal change unless it is a C-level officer. We go to yellow flags. Todd talked about a change of address. Well, someone's moving to a different suite within a building or another building within the same city. We may view that to be disruptive, but not highly concerning. If they're moving to a different state or moving out of the country, that might be a more of a concerning type of a change. So we break it into green flag, yellow flag, red flag, and we note every change to our clients every day. Some of the areas that we focus on that we might red flag would be change of a chief compliance officer. We think that's a sort of a very important change. Obviously, if anybody has an item 11 notification, item 11, for those that don't know, are what are commonly called within the industry the bad boy acts. That's criminal, regulatory, any type of lawsuit, civil or other criminal actions. So if someone has an employee who is arrested, someone has an investigation that leads to criminal charges, the manager is obligated to notify everybody and update their Form ADV within 30 days after the event occurred. And that would be the type of thing that we would pick up and notify our clients. Large changes in assets. So if assets go down significantly, we red flag it. And if assets go up hugely, we will red flag it. Again, that doesn't necessarily mean things are bad, but I think it's incumbent upon people to touch base with the manager to say, hey, I noticed your assets recently went from 1 billion to 3 billion. That is a huge change in assets. Are your people, are your processes, are your systems, are you able to handle? And those types of things. So we have a group of things which we would red flag, yellow flag, or more commonly green flag. And that is if anybody's interested, you're welcome to chat with us about that offline. Real briefly, question came through. I'll go to you first, then I'll come back to Todd. Whether you run a credit check, background check, any dead, this is dead to me type of killer. If the person had a DWI 10 years ago or 15 years ago, I'm using that only as a for instance. Real quickly, can you identify what might be the types of things that your organization, if you found it in a background check, you found it on their Form ADV, that you would sort of halt the due diligence process and say the manager is uninvestable? So things from a background credit check or ADV, Anu, that you would say is a deal killer.
I mean, any of these items, if anything comes up, it does, obviously you need to have a conversation with the manager, understand the exact circumstances of what occurred, how long ago it occurred. For me, any of these items are definitely big red flags. Any regulatory item, any criminal activity, civil activity, obviously you'll have to try and understand what the circumstances of those are. Some are pretty mainstream, but always go back to the manager and speak with them, try and understand the circumstances, and then based on your own risk profile, try to see what would work and what would be a deal breaker.
Todd, any deal breakers for you?
Yeah, I agree with Anu that the regulatory concerns is an immediate red flag. But I would also say that in having dialogue, if you find these things out, are the managers or are the persons involved humble, or are they dismissive? Was there some moment? So DUI is something that I've experienced in my career going through this job. I've found those findings and I've talked to managers about them, and some of them have said, yeah, I was young, I was immature, I wasn't thinking straight, I didn't realize the jeopardy that this put the business in. And so, how transparent and thoughtful and honest are you about those things? Because we're going to find them. They're going to show up in these background searches. And so are you transparent, and are you thoughtful in communicating what your digression was and how you've resolved it? But to the original point, are there some things that are just uninvestable? Yes. Regulatory is uninvestable for us. And frankly, people that are overly litigious. We came across an individual, not when I was at Children's, but my previous role, where this person was in litigation 7 times out of 10 years. Some of it was civil, some of it was professional. And so that just creates a pattern of headline risk that our institution is unwilling to accept.
Again, I agree with what you're saying, and I will say right out loud that I stole this from Matt Ariyama. Matt is a fund director with High Water, but when he was in ODD, I'll give him the credit. I stole this from him. He said his approach was to tell the manager that we are going to run a background check on you, and we are going to find things if they exist. Do you want to tell me now about anything that you haven't already disclosed that may show up on your background search when we run the background search? Because let's talk about it now. And if the manager said, nope, we're full clean, there's nothing that we need to tell you, and then they ran the background check and they found the DWI or the drunken disorderly or the bar fight from college years, that was almost more of a deal killer, the lack of openness, the willingness or the intent to hide the issue, or the bravado that said, no, they're not going to find this or whatever. That was a more exclusionary. It wasn't so much the issue sometimes as it was the fact that they said, you will find nothing, we are clean. And then when they find something, it's clear that they are not the type of manager that is open and transparent, which they found to be more of a concern. Some of the other things that we talked about earlier in the conversation, maybe we'll go a little bit later in the life of the fund, is the audited financial statements. Todd, if you don't mind, I'll come right back to you. Does your organization typically receive the audited financial statements? Who within your organization looks at the audited financial statements? And just a real high level, what is your process? What do you do when you're trying to go through those?
Sure. We do ask for them. We do receive them from all managers that we're invested with in our portfolio. They serve a multi-function purpose here at Children's Healthcare of Atlanta. One, my colleagues in Treasury and Finance use those in preparation for our audited financials as an institution. We are a private pediatric nonprofit, and so we publish our own audited financials. And for those, we have need for our managers' audited financials. So that serves one purpose. But for my purposes, I do look at the audited financials. I do look at the balance sheet. I do look at the footnotes. I do look at a lot of the metrics and things that we'll talk about now, which are things like expense ratio, things like your short positions, things like other disclosures that you're making in your audited financials. All of these things help me understand if you're executing your business the way that we expect you to execute your business. And if there were unforeseen things in your audited financials, for instance, if last year your short expense was $1 million and this year your short interest expense is $5 million, well, clearly I'm going to want to understand why you had a lot more shorts in the market than you did the year before. Did you hire somebody who's capable of doing that? Or was it something that you did for other extraordinary reasons? So these again are things that people like myself and Children's Healthcare of Atlanta, we plot those metrics and we look at those things and we look at the change and the rate of change year over year with those documents.
Anu, I'm sure that you guys look at it's a little bit different because your pre-investment due diligence, the fund that you're potentially looking in, the closed-end fund does not yet exist, or it is in its earliest days and may not have an audited financial statement at that point. What does your organization do as an investor, mostly into closed-end funds? How does your firm look at audited financial statements?
So yes, similarly, audited financial statements serve different purposes within different departments. From an ODD perspective, I do personally receive all of the audited financial statements on an annual basis. And the types of items I also look at are the expense ratio. Specifically, from the PE world, expenses are very important. And the one item I would like to add that I focus on is any disclosures related to related party transactions. I think those disclosures are extremely important to look at and try and understand what those transactions were. And oftentimes I would go back to the manager to discuss those particular transactions, whether they were expense payments to an affiliated entity or other types of items, similar items.
I fully agree with both of you. I couldn't agree more. It was a concern of ours in my practice, the due diligence practice at Duff & Phelps. We developed a system called AFS Clarity, Audit Financial Statement Clarity. And what we look at, I'll sort of fill out the list a little bit like you. We look at the audit opinion to make sure is it qualified, unqualified, are there any other emphasis of matter, things like that. We'll look at the date to make sure that the manager filed it on a timely basis. We calculate the total expense ratio, trading expense ratios, look at the performance fees and management fees to make sure they're consistent with what we expect. We're looking at things like leverage. We just recently ran a manager that was 983% leverage. Is that consistent with what you thought? Were you expecting a manager who was almost levered 10-to-1 within the portfolio? Is it or is it not consistent with what you thought the manager was doing? We look at the ASC 820 levels. So you're looking at the liquidity, if you will, and comparing that to the manager's stated liquidity. If they are monthly liquidity with 30 days notice and they've got a third of the portfolio in level 3 assets, we flag that for our customers. Again, it doesn't mean that there's a critical issue. It just means that there may be or may be approaching an area of concern. We look for litigation disclosure. We look for OTC repo and OTC counterparty exposures. We go through a whole variety of checks, and we found that is doing a comprehensive review that meets fiduciary needs. I think that's helpful. And there's so much we use folks that are former auditors as part of our team doing those ODD quality checks. And I tell you, it's been, even as an ODD guy who's done this for many years, I'm always learning something new. One thing I'll put out there, I'm seeing a lot more funds that are having direct investments in offshore feeder funds. So there are investments not only at the master fund but also at the feeder fund. We flag that because that may or may not be something that the investor may be aware of, that the manager is choosing to invest in securities, and therefore that is the kind of thing that we would flag to say, are you aware that the manager is using the offshore fund as some type of a blocker vehicle? Todd, I'll circle back to you if you don't mind. So you're going through and you see something, you see a style drift. You think he's Japanese equity long short, and you're seeing equities from outside of Japan. You think he's low levered, and you're seeing higher level of leverage. Whatever it is that you're seeing, which you talked about an inconsistency, give folks a little bit of an idea of what is your form of follow-up when you see something like that, what might happen at the Children's Hospital.
Sure. I think two things will happen. The first thing is once that observation is made, whatever it is, whether it's style drift, whether it's an increased leverage, or whether it's other products that we're not expecting to be in the portfolio, there'll be an internal discussion with the rest of the investment office here, because perhaps it has been communicated to us, and perhaps they have been transparent and said, hey, we saw this opportunity, we're going to take advantage of it. And so the leading indicator already happened. They were transparent. They disclosed it to us. And then the lagging indicator, it shows up in the audited financials, which is a good chain of events to have occurred. In the event that that's not the case, and the first time we find out about it is on the audited financials, that prompts us to have a discussion with the manager and really understand what they're doing and why they did that. And for everyone who's listening into this, one of the things that we expect managers to do is to play a certain role in our portfolio. We underwrite them and we provide capital for them to invest on our behalf and on behalf of this mission to play a specific role in the portfolio. And when they fall outside the parameters of what that expectation is, those are reasons for right sizing, for termination, for other things, because we're constructing a portfolio using a lot of different things internally that are not necessarily transparent to a manager. And while the manager may think that this investment idea is the best thing on their plate right now, it takes them outside the scope of what we expected them to do, which may be counterproductive to the overall portfolio that we've built. And so we'll have an open dialogue with the manager, and we'll explain to them that one of the things we expected them to do was stay to their knitting and continue to invest the way that they underwrote and they described for us during our underwriting process was their own investment process. And so if that means that their leverage goes from 2x to 6x, aside from the operational and mechanical differences that creates for them to carry that amount of leverage and reporting and compliance, just the sheer exposure perspective may be different than what we expect from an overall portfolio construction on our side. And so we've had to have some tough conversations with managers. We've actually terminated managers who, to John's point, we expected them to be public equities, and then 33% of their portfolio was in level 3 private assets with an expected IPO date of 3 years or more into the future. Well, that dramatically changed how you looked relative to benchmark. It dramatically changed where you fit into our portfolio, and you presented us with a challenge we didn't think we had when we hired you a few years ago. So those are the types of things that we think about in the process that we go through. We then also have to present that information, if it's material enough, to the investment committee. And the investment committee sometimes will also choose to act or prompt a decision to be made as a result of some of these things.
Todd, quick question. One of the folks on the Q&A asked, are you using any specific software? Or you talked a little bit about looking at the audited financials and looking at change over time, like leverage and different things. Are you doing that in Excel? Or are you using any specific system to do that?
Sure. So candidly, it's Excel for now. Children's Healthcare of Atlanta's investment office is in the middle innings of using ourselves. And so we do not have software at this point to do that. Obviously, that will make it much easier, but it's Excel for now.
I'll throw out a couple of quick questions. Someone asked, it's a bit off topic, but with this particular panel, Anu, I'll come to you. Where are you at with on-site visits at this time? Or is everything remote, or are you guys considering on-site visits yet? Anu, I think you're on mute.
Oh, apologies. So yes, personally, I'm a proponent of on-site visits. You do get to tour the office space. The last year has worked out well. We've seen a lot of transparency from the managers, so the remote meetings have been working. But I am expecting to go back to on-site visits as of the next couple of weeks from now.
Todd, where are you guys at with your decision to go on-site at this point?
We've had managers that have been traveling through Atlanta come to see us. So we are open to managers coming into our office, and we also have the green light to travel. And so our investment team, including myself, has been traveling as of last month. And so that travel, I would say, and I'm not sure, Anu, if you feel the same, for us, domestic is where we start. So trips locally around the United States, since it's the logistically most easiest thing to accomplish. But we also are looking at traveling to London and abroad after September 1st, which is when a lot of managers will be back in their offices.
Right. No, absolutely agreed. We're starting off with the domestic visits as well.
Yeah, I think we did some due diligence. I think we went all the way back as far as June or July of last year that we did some on-sites. One quick thing for those people who are considering doing on-site that you're excited to get out and meeting with your managers, ask the manager if they are back in the office. We did some on-sites. We were asked by the institutional investor. They requested that we go on site. The manager met us at their offices so we could see the offices, but it was clear that the vast majority of the staff was working remotely, and the managers came into the office just to appease us. So while we did have an on-site and we did see that the offices actually existed, we didn't really get a sense of how the fund was being managed actively because the vast majority of the staff was not there. And I also will say I'm not sure it was a terribly productive meeting in that we did it at the request of the manager, but we were all wearing masks. We were all well scattered around a very large conference room, sitting well apart from each other and half hollering questions at each other through our masks and getting replies. So we did it. We were on site, but I think it's before all the ODD people start suddenly jumping on airplanes or trains or whatever the case may be. I think it's another important question before you go is the staff actually back on site? Because I think one of the things we're trying to get from our on-site visit is a real sense of how the manager works and effectively works. So I think while going on site is hugely important, it also has to be tempered. I'm looking at another question here. How are you dealing with, Todd, managers that may be working remotely and have people scattered widely? Does that once you talk to a manager and you realize that they are no longer working out of their offices in Atlanta or Miami, that in fact staff was scattered widely, did that bring any other concerns to you?
Concerns, no, but does it prompt a few more steps in the process? Yes. I think for me, part of ODD is understanding, to your point, how everything interrelates and how everyone interacts. And so when you have people that are scattered and not in one office or in different places other than their stated registered office, it just adds more steps to the process. It makes me want to understand at a deeper level how you're communicating internally with colleagues. It makes me want to understand the technology underpinning and the security of that technology underpinning all of what you're doing for the asset manager. And then how that translates to your day job and the processes, just to ensure that all of the compliance manuals and operations manuals and valuation process, make sure that all of those steps continue to be followed, even if you're working remotely from a ranch in Wyoming.
It's a real concern with hacking and other problems with people working remotely, and they may not have the proper safeguards and security. We're getting down to literally the last minute of this panel, and we are closing these up on a timely basis. I want to thank everybody who might have joined in the panel. We had a couple questions that came in here at the last moment here, and we will respond to those questions following the panel. I strongly urge you to look at the bios. Todd is an ODD expert. Todd is an expert in running operations. If you want to learn more about his process, please feel free to reach out to Todd. He is an expert. Same with Anushri. I've known for many years. She is a brilliant due diligence person. Feel free to pick her brain. I hope she doesn't mind me saying that. Anu is an expert in the field of ODD, and she is one of the leading thought leaders in the space. Feel free to reach out, connect on their bio, connect on LinkedIn with Udith, with me, with Anu, with Todd. We'll be happy to communicate with you. We thank you for joining today, and we hope to speak with you again soon. Thank you, everyone.